we have a joke that says that it is cheaper to die than to fall sick in Singapore. So I think especially during COVID, we saw the rise in a number of cases of people falling sick and complications from the illness as well. So I would say the main priority is to take care of your healthcare needs, inpatient and outpatient.
In a world that moves the speed of a click and a swipe, the future is unpredictable. Life's uncertainties often catch us off guard, leaving us vulnerable to unexpected challenges. Joining us today is Mark Anthony Ng, Associate Director at Great Eastern Financial Advisors Private Limited, guiding us on insurance, revealing its practical value beyond the surface. Hi Mark, welcome to Teatime Tuesday. How are you?
Thank you for having me. Yes, I'm good.
So let's dive right in. Mark, let's say someone in Singapore, never having insurance, seeks your advice. How do you help them navigate the process of getting their first insurance policy?
The first thing I'll do is to conduct a fact-finding process. I want to do a cash flow analysis with the person, find out what are their financial goals and where do they see themselves in the next 5 to 10 years. From there, I will explain the different types of policies and the different coverages that are available out there. So there are 4 main groups that I usually look at: the new to workforce, mid-career achievers, parents with young children, and the pre-retirees. And based on the group that they fall into, I would recommend certain policies or certain types of coverages that might be more suitable from them. But at the end, we will still want to assess the affordability, and the budgeting. So it depends on how much they can afford to purchase insurance policy. But I need to disclaim that this process is a very customized process. So sitting down with your financial advisor is important to have that journey to see which are the policies that are the most important for you at this point in time.
Let's dig a bit deeper. How does this decision-making process differ for individuals in various life stages? You touched on it briefly just now.
Yeah, so I mentioned the 4 groups. For example, the new to workforce group probably just graduated or they're just starting work. They might have just received their first paycheck. So it could be a very confusing time for them because they are unsure how to spend this money, or how should they segment or proportion their income, to make sure that their expenses are taken care of and they are saving for the future, for their first big purchase or possibly starting a family. For the mid-career achievers, these are the guys who already have purchased, some policies or done some investments on their own. So they're probably looking for something more, probably increase their coverages based on their current life stage. Perhaps they have different plans for the future. Parents of young children, not an easy group because raising children in Singapore is not very cheap. So there are a lot of associated costs as well, so we need to bear that in mind. But what's the most important for this group? To make sure that their children go to school, to get good education, whether in Singapore or overseas. So we plan for that as well. For the pre-retirees, these guys have already worked for many years. They have already achieved probably a certain lifestyle which they might want to preserve when they stop working. So we help to plan for them, to make sure that they do not suffer a drop in this lifestyle or the quality of life when they're finally retired.
Okay, so from what I'm hearing, all these different types of individuals definitely have to think it out, spend some time to kind of figure out what their goals and expectations are in life, and that's where you come in.
Definitely. I think before I have a conversation with a client, I would like to know where do they want to be in the future and what do they want to buy and what is important for them. Yes, so when the client or the prospect knows what they want, I'm able to provide them with the solution.
It's a two-way street.
It is a two-way street, yes. It is not just me coming down to explain to you all the different policies and then trying to make you purchase one. I want to give you something that suits you at this point in time and for the future as well.
It's got to do with needs selling, right?
Yes, we call it needs analysis.
Okay, got it.
Yes, so needs analysis is an important part of the process.
Let's move on. Could you highlight the most important insurances individuals in Singapore should prioritize and why?
One of the main problems in Singapore, I feel, is the rising healthcare costs. Yeah, we have a joke that says that it is cheaper to die than to fall sick in Singapore. So I think especially during COVID, we saw the rise in a number of cases of people falling sick and complications from the illness as well. So I would say the main priorities is to take care of your healthcare needs, inpatient and outpatient. That as a baseline, if you're building a financial house, taking care of your medical needs and your health needs would form a strong base for this house. This is to protect your family income, to protect large bills. We're mainly talking about large hospital bills and large medical bills. If we are operating on a limited budget, or we really wish to prioritize, we should take a look more on the healthcare and the medical needs.
What factors influence the cost, and how can they get a sense of the price range?
I think healthcare inflation or medical inflation is going at a rate of 6 to 9% over the last few years. Okay, I think we have trouble having enough beds in the hospitals as well. Okay, so in terms of the price range, it is changing. Okay, in fact, over the last few years, we have had some changes in the medical insurance premiums. So this is to keep pace with the rising healthcare costs. Okay, but to give you a sense, for a 30-year-old, probably you're looking at a 1,000 to 1,500 per year just on medical insurance or hospitalization insurance. For a 40-year-old, we're looking at probably 2,000 to 3,000. The 60s or the 70s, we can expect to look maybe $3,000 to $4,000. But I need to disclaim that these are the medical premiums for private hospitals. Okay, for public hospitals or government restructured hospitals, we're looking at a rate of 40 to 60% lesser than what I mentioned. So what other factors could influence? Okay, so insurance companies, we kind of need to look on an overview, how to keep this sustainable. I think in the end, we want to provide medical insurance to as many Singaporeans as possible, but we need to think in a bigger picture. The claims experience affects the premiums as well. Okay, but I believe on the Ministry of Health website, I did a comparison table across all the insurers as well to get a sense. So yeah, that would be a good place to check it out.
Given the various factors to consider in daily budgeting, how can individuals in Singapore allocate funds for insurance premiums while maintaining overall financial balance?
Okay, so as I said, everybody has a different, cash flow, inflow, depending on occupation and the seniority. So it'll be good to look at it based on a percentage or proportion of your income. Yeah, this is how I would advise. So I generally follow the 5-3-1-1 rule. So 50% will be on your expenses. These include your negotiable and your non-negotiable expenses. So things that you have to pay on a monthly basis, for example, your mortgage, your car, your credit cards, etc. I believe that since you work so hard for your money, you should be able to spend it. Why not? But the 30%, I would say try to spend it on insurances and investments. This is important as well because some of the insurances and investments will actually give you returns that can help for your retirement fund or your future fund as well. Okay, so setting aside at least 10% for liquid savings every month in times of emergency, or perhaps you want to go and travel, or you are saving for something, for a particular purchase. Okay, so that 10% serves as a rainy day fund. And another 10%, I would say, is a miscellaneous fund. So depending on what you prefer, maybe you want to give to your family, to your parents, for example, okay, or you want to give it to a religious organization. So by following a strict proportion, okay, you will never ever feel that your finances are out of order. Yeah, so if you keep track on a monthly basis or rather on an annual basis, okay, and this generally follows a certain proportion, okay, you will never feel that you're overpaying or you're overspending. Yeah, in fact, since a big proportion is being set aside for your future, you know that you'll be taken care of, because the only person that can take care of your future you is your present you. That's why we call it planning. It's not purchasing or buying. Yes, purchasing or buying your first insurance policy or a policy in general, okay, it's a process. Okay, it leads to a particular goal and what you want to achieve in the future. That's why we call it planning. Buying is just part of the process.
Brilliant. Okay, now before we wrap up, is there anything else you'd like to share with our audience?
If we are looking out for a first insurance policy, okay, it is a big commitment and it could potentially be a lifetime commitment as well. Okay, so the first step is always the hardest. Okay, but the journey of 1,000 miles starts with the first step. Okay, but take the time. Spend time thinking about it and maybe doing a bit of research. Okay, but in the end, I think everybody should have an advisor. Okay, somebody that they can trust, somebody that they will look out for their needs and be able to journey with them throughout their different financial life stages.
Brilliant. I trust you, Mark. Let's do this again sometime.
All right, sure.
Remember, in this fast-paced world, a well-considered insurance policy could be the anchor that ensures stability in times of uncertainty. You've been watching Teatime Tuesday. Until next time, keep seeking knowledge and financial empowerment.